Hey guys, it's Colin with Investbnb Solutions. We offer co-hosting, property management, consulting, and a lot more for short-term rentals. Short-term rentals are Airbnbs, Vrbos, vacation homes, essentially. We are located in Grand Prairie, but we can consult or manage all over the world. It doesn't really matter where you are. We have great teams in place. We're back in Canada for this Market Monday. We're looking at Toronto. Toronto is in Ontario. 65 out of 100. If it's your first time watching, this market score is based on things like rental demand, revenue growth, seasonality, regulation. We'll break that down as quick as we can. Rental demand, that just means that it's pretty popular in that area. There's over 34,000 active STR listings, and there's still lots of demand. One thing that is a little concerning if you're looking at investing in the Toronto area is revenue growth. They give it a really low score. That usually means when I see something like that is it's really competitive, kind of obvious. There's so many listings in this area. But either way, there's probably, unless you live there and you already have a place there, I would try, why not list it? But if you don't already have a place there, try somewhere else. There's going to be markets that are a little bit cheaper that aren't as competitive, where you're going to have a better, annual revenue growth increase year over year. I think you'll find a place with higher occupancy rates. Let's keep going though. Seasonality, that's actually a really good score for Toronto. But I'm not surprised. Like in a metro market, there's people coming for sports events all year round, concerts, different kinds of festivals for work. So those things usually in a big city like that, they never stop. So seasonality is good there. If you have a place, you should be pretty busy year round. Regulation, I always say this, I thought that the score would be lower in Toronto. There's talks like we'll eventually look at a place like New York and we'll look at the regulation score there. But there's just talks of people on Facebook group, Superhost pages, them saying and I've even heard it for Toronto that, my listings they were all removed in Toronto, and people are freaking out because the city's just cracking down on short-term rentals. They don't want them in certain areas. So yeah, I'm kind of surprised the score is that high. Maybe someone from AirDNA can help me out with that one. Revenue growth is down a little bit. Same with occupancy rates. These are both, they're not bad. Annual revenue, I know that it's really expensive to buy in Toronto, to even rent in Toronto in that area. So I feel like this should be higher. I don't feel like the margins would be there. Average daily rate, not bad. Good to see it's going up. And then we don't always talk about RevPAR, revenue per available rental. Yeah, it's good to see an increase there as well. But Toronto, just fun to look at it. I wouldn't say go buy one there. I would buy somewhere in Grand Prairie and list it. Not as competitive. You're going to have better occupancy, more demand, and better seasonality. But thanks for watching.